On this episode of Exactly How, we're going to show you exactly how to position yourself to get all of the money you'll ever need for your deals. You're going to understand the different emerging markets and how to position yourself in key cities, and we have some great gifts for you on this episode of Exactly How.
You're listening to the Exactly How podcast, where you'll hear the underground, closely guarded wealth-building secrets of successful people around the globe. Discover exactly how to improve your mental, physical, and financial health. Feel better, make more money, live, give, and prosper in today's exciting, fast-paced world filled with opportunity for those who know exactly how.
Hello, everyone. Welcome to the Connected Investors podcast, Exactly How. During this episode, you're going to discover exactly how to have private non-bank lenders very eager to give you all the money you need for your real estate investments. For those of you who are new, my name is Ross Hamilton, today's host and CEO of ConnectedInvestors.com and PrivateLenders.com. Today, we have the privilege to learn from a man who was able to bootstrap his business to amazing heights without taking on any debt. Him and I have a very similar pattern in that right there. Prior to his career in real estate, he was the VP of acquisitions. He was a business owner and an analyst at Goldman Sachs. All that changed when he jumped into real estate, in the real estate investment world back in 2002, because he wanted to get off the roller coaster ride that he had experienced in his past two businesses. He wanted to start a smoother, more steady path upward without the giant setbacks. I would really describe our guest as someone who's always looking to grow his knowledge and continuously learn. Today, he's going to explain to you exactly how to have lenders very eager to lend you money. His name is Jan. Thank you so very much for taking the time to speak with us.
Thank you, Ross. It's a pleasure to speak with you as well.
Yeah,
I appreciate you having me on your show.
Yeah, I've really been looking forward to this particular episode because there are, being where we are as Connected Investors and PrivateLenders.com, people are always coming to us asking us funding related questions, and we're not lenders. We are just like a connector between you and lenders. So we have some really cool questions that we're going to be covering here and really helping you break through any of those self-imposed roadblocks that might be between your ears that are stopping you from getting the capital you need to deploy into real estate investing at this very exciting time in the economy. And we're going to do something really cool on this show. We have a little bit of a case study we're going to do on a property that Jan has recently lent on. And we're even going to talk about the markets in a unique way. On a previous podcast we did with an individual who does a due diligence for all of the hedge funds, he really broke down the market. And so many of you liked that I've been reaching into our guests' heads saying, hey, what do you know about the market that our members would benefit from? So before we dive into exactly how to have lenders very eager to lend you money, Jan, you contribute a lot of your success to your ability to work hard and add value to all of the professionals and entrepreneurs that you meet. Why do you think this has played such a big role in your success?
Well, goodness. I know you've asked this question to some of your other guests, and I would just say that when I started in real estate in 2002, I really wanted to become the best real estate investor that I could be and spend the rest of my career doing it. I call it putting the blinders on, kind of like the horses you see that have the little blinders. I decided that's all I was going to do, and it became very simple to know who are my people that I need to help them succeed and stay close to them and learn from them, and what mentors do I want to have. So basically, it's not, even in LA, which is one of the bigger markets in the country, it's not a huge industry. There's probably 2,000 or 3,000 people that are in my world that I've worked with or talked to or met. And I was explaining to someone that we had an event at this property in Venice last night that we're going to be talking about. And I was explaining to one of our newer employees, there are some high schools that have more students than that, and in high school, you have 4 years to get to know however many people are in your high school. Here, I've had 15 years so far, and I'm going to probably get another 20 years. And you can really start to get to know those people, and you can find ways to help them out, and they will return the favor with referrals back. So I've just found it's common sense. I've got kids. One of them's in college, another one's going to be in college soon. And I just want it to be, as you said in the beginning, smooth, successful ride for me and my family. And I found the best way to do that is to just constantly invest in the relationships that I have.
Yeah, I mean, nothing mean, we're going to talk about a lot of high returns here on a lot of different activities, but there's been no higher return in my life than the relationships I've developed within my industry. And, you know, a lot of people, you know, Jan, that are watching this, they might be thinking about investing in real estate and they're sitting there at home all alone and they don't have anyone around them, right?
Mhm.
They don't get to feel the momentum. They don't get to see the success stories. So they're on podcasts like this, they're inside Connected Investors, they're meeting people, but I couldn't, advocate any more the importance of connecting with people, you know, shaking hands, going to events, you know, a group of individuals that you talk to daily that are doing the same thing you're doing, having the same struggles. It really helps push you through.
I couldn't agree more. And also, one of the great things about the real estate industry is that people are inclined to try to help each other succeed, because if you succeed, that doesn't make it less likely for me to succeed. I can just learn from you, or you could learn from me, or I could make an introduction, or vice versa, that helps each other. So it's quite different from a lot of other careers where I think it's more competitive and where it might feel like you're in a big corporation. In real estate, everybody's trying to get the same types of results, which is to have profitable investments and have income over time. And so I would encourage any of your readers, or your listeners rather, to keep on working and exploring in either investing in real estate as a way of building wealth, or even working as a professional in real estate, because I find it's a really satisfying career for that reason, just exactly why you said.
Yeah, I mean, everyone wants everyone to win ultimately. So that's really exciting. Well, great. Yeah, thanks for that information. It's definitely inspiring for me. Now, what makes the Exactly How Financial Freedom podcast unique is every show comes with a detailed action plan. We'll go ahead and pull the steps and all the lessons out of our host's head and give you a blueprint on how you can implement exactly what we're covering. So in addition to all of that, we have a free gift that our host is going to give away, and we give away some free gifts. So to get the show notes that include the takeaways, the resources, the gifts, all you have to do is visit exactlyhow.com. Really easy to remember, exactlyhow.com. In addition, just by visiting that site, you can throw your name into the hat to get entered into a drawing we do during every show to win access to what's been coined the pre-MLS. This is every type of investment grade property you can ever want served to you on a silver platter and a beautiful user interface. We're going to give it away to someone right here in just a few minutes. It's a $3,000 value you're going to get for free. So visit exactlyhow.com. I do a demo of the software there to show you all the ins and outs, and you can win a free subscription to that. So before we jump into becoming a lender's dream, really is what we're going to be talking about here. We're doing something different on this show. So what I want you to do is talk a little bit about a recent property that you funded and the journey that the investor went on to get to where they are.
Absolutely. So we have a client named Fritz Grieve, and he started his career as a builder, as a contractor. And forgive me while I turn my phone off. And he came to us about 6 or 7 years ago wanting to become a developer. So he had an amazing design sense, amazing craftsmanship, but he hadn't actually been a developer before. And in places like Los Angeles, it takes a fair amount of capital to do a project, because buying the property that you're going to redevelop is probably about $1 million proposition. And so we went on to do a series of 4 successive investments with him, and he's been an amazing borrower. He is probably our ideal borrower because he's so focused on what he does. He lives in the neighborhood that he develops in. He really knows what aesthetic people are going for there. And also his projects have sold very quickly because people recognize there may be other houses on the market, but his houses are special, and he makes it special because he comes up with some design aspect and just quality that's differentiated. So what could I tell you about our relationship with Fritz, or about this loan, that would be most helpful to your viewers?
Yeah, I mean, I would just, what I heard you say is that this person wanted to do something they never did before.
That's right.
And you've taken, as a lender, you've taken a few small steps. You did a few smaller deals prior to getting to this deal. And can you just explain why that was important from your seat in the stands?
Absolutely. So when we started with him, he has purchased a property for, it was sort of like the cheapest property in the neighborhoods that he works in. and he did a nice, cool, modern house on the property. But it was great for us to see him perform, see what kind of a product he delivered, and then see how the market received it. The other thing that we were looking at, little subtle signals that matter a lot to us, is how did he treat us and members of our team? And we, believe it or not, we're in business to do loans, but we don't want to do loans with borrowers who are going to be super hard on our team, because our business as a lender, it's all about service and speed to the borrower. And so we want to work with people that we enjoy working with and that appreciate how hard we work for them too. So, so he's been a great borrower, because one of the ways he signaled the kind of borrower he was to us is when he finished his first property, he said, "Hey, I'd like to have you and your team over to the property and let's have a drink and a couple of hors d'oeuvres together, just to enjoy the property together before I put it on the market." And then
that is a relationship thing.
That
FYI.
is a relationship thing.
Get back to the original conversation we had.
Yeah, exactly. And that relationship has blossomed a lot of different ways, but that culminated last night at the property that he just finished, 1316 Morningside Way in Venice, which is a spectacular, larger property in Venice, where he offered us the chance to have some of our clients over and host a reception at the property. So we had a DJ, we had catering, we had drinks and food, and we were able to invite about 60 or 70 of our clients to the property. And that's an amazing client, because he trusted us with his multi-million-dollar property before it even goes on the market. It's basically, he took the photos for the MLS today, and his wife was there too, and I know his wife as well now, and she was a little nervous. She was looking around to make sure that we were not going to abuse the property right before it goes on the market, because this is a very substantial investment for their family. But that's an example of how he's been the most generous, amazing borrower to us, and we'll basically do anything that we possibly can to help him succeed at this point.
So now, this guy purchased this property, he sells it, he makes a lot of money, right? I know the market out there is really hot. We'll talk about why it's so hot probably in a little while here. But now when he picks up the phone and he calls you up and says, "Hey man, I found another deal," he's going to be green lighted just on the fast track. You basically want to give him money as fast as you can. Is that a pretty accurate statement?
Yes, he is a borrower that we have investors on the other side who put money into our funds, right? And so when I invest in a loan by one of his projects, I know it's going to be safe, and I know it's going to serve what my investors care about, which is being able to sleep well at night. So yes, you're exactly right, Ross. We will lend him money at the best rate we can do. If he wants the higher proceeds that we can do, we'll stretch for him. We'll basically we'll do whatever we can to help him succeed, and that includes, not in his case so much, because he's pretty self-sufficient, but one of the things we've been able to do with some of our borrowers is a lot of times they're raising equity from other investors as well, right? So we've been able to introduce some of our borrowers to our investors who want to place money into the equity side of these transactions. And that's a big service, because it's very time consuming for them to raise equity. Yeah, no, absolutely. That makes a lot of sense to be able to put all of those different pieces together, the debt, the equity. And, really you guys have he's become part of your family, you become part of his family, right? And now it's just, let's help each other succeed as much as possible. And if, he was ever in a deal and something unforeseen happens, you guys are going to, be reasonable with the gentleman, because you understand that he's doing everything he can. Very, very much so. And I think you said this, but I'm just going to put a name on it. What you're talking about is community. He is in our community now. He's one of a couple of hundred borrowers that we work with, but he's in a top category of our borrowers in terms of our experience with them. And then we've got about 500 investors on that side, and we really try hard to see how much we can cross-pollinate between the borrowers and the investors. And it turns out, again, back to the beauty of real estate, is that we're all interested in learning more about real estate. We're all interested in learning what are the new trends, or where are the opportunities now. So we've put on a lot of events over time that are educational events, kind of like you're doing with these webinars and podcasts that you're doing. but we try to become cross-pollinate information and education as much as we're cross-pollinating introductions and dollars and investing as well.
Yeah. Well, it's all really coming together, with your ability to, help other people succeed. You've had some fantastic success in your company and in your life. And we were talking about different areas and different trends. Can you explain the free gift that people can pick up at exactlyhow.com when they look over these show notes?
Absolutely. So we've written a series of white papers here. I enjoy writing, and so whenever I'm able to learn from my experience in the trenches and see trends, I'll try to write a white paper around that. And the one that we chose for today to give away as a gift is called How the Urban Renaissance in Gateway Cities Creates Opportunities for Savvy Investors. So I think we can all see how certain cities are really winning in this economy. They're gaining population, they're gaining great jobs. And as that happens, there is an opportunity to redevelop real estate in those cities. So the white paper is all about the different niches. If you can get into one of those markets that's winning in the economy, how can you as a real estate investor take advantage, and what type of opportunities are there? So we'd love to offer that to your audience.
Yeah, thank you so much. And we'll make sure to have that and all the information at exactlyhow.com. If you haven't went there yet to throw your name into the hat and you're watching this on Facebook Live or YouTube Live, go ahead and do it right now, because in just a little while, we're going to give away our $3,000 software. Okay, well, great. Do you want to touch on the market, Jan? Before we jumped on the call here, you have so many different bits of value you can bring to our members. We were having a hard time narrowing it down, but you had mentioned a little bit about wanting to talk about the market and kind of what you're seeing. Is there anything you want to touch on there before we get into the exactly how element of this show?
Well, it's here we are in the end of 2019, and we've had the longest real estate bull market in memory. And clearly there's some kind of adjustment that's got to happen at some point. So it's late in the cycle, and I don't know what the correction will look like, but it stands to reason in the next couple of years there will be some kind of correction. We are seeing a little bit of softness, or maybe even a meaningful softness in certain types of property in certain locations. So the giant mansions in the hills of Hollywood and Bel Air and stuff like that, that's a market we've been cautious about. Down in the flats near the best jobs that are right down in the city, it's been stronger. But I think the bigger trend that we see, which is more of a 10, 20-year trend, is really that places like LA are going to become denser. So LA was built similar to a lot of other cities in a very suburban way at a time when the land was not very valuable. And so you've got a lot of little bungalows with backyards and front yards. But the future of places like LA is probably going to be more like Brooklyn in New York City, where you've got 3 stories and not as much green space, but probably higher density. So I think that the single biggest trend that we are looking at as the driver of our business and our borrowers' business is, I would call it densification. Taking those 1 and 2 story buildings with yards and being a little bit more efficient in how you use that land, because if it costs you $1 million to buy the lot, you have to be very efficient and do the most you can with that lot. And I think that'll be a 10 to 20 year trend here, especially in LA. Over the next 10 years, we're going to have the Olympics here. And we're actually in our office. This office was the office of the LA Olympics group that won the bid to bring the Olympics here. So we took over the space. They moved into another space. And they're building a lot of new metro stops all around the city in the next 8 to 10 years. And every time they put a new light rail station somewhere or subway station somewhere, there's going to be an explosion of activity around there, right? A lot of redevelopment. So we think that's a great trend. And I think other cities have similar trends going on as well.
Yeah, no, that's interesting. And you reminded me that the Olympics are being held there. I recently, have you ever been to the Olympics before?
Unfortunately not, but it's a life gold mine to go.
Yeah, so I grew up as a competitive BMX rider, and this is the first year that BMX is in the Olympics. And some of the coaches there are people that I used to ride with back in the day. So I'm like, great, I'm going to go to the Olympics. I had no idea how hard it is to get tickets. I'm like, surely I can pay off someone. Nope. It is just every single event sold out, no matter how boring it is. There's no way you could go. So if you want to go to the Olympics, plan ahead, because you actually have to get thrown into a lottery to get these tickets. So I was very naive in thinking no one's going to want to see BMX. Well, they're going to be at the Olympics. Anyway, that's really that's a really good breakdown on what's happening. Now, for those of you who like green space, I'm sorry. You know, my wife just watches these places get torn down, and then the most efficient building goes up, and her soul cries a little bit. But you know, it's about highest and best use for real estate investors. And actually, Jan, I'd like to run something by you, because on a previous podcast we did, a gentleman tried to kind of predict what he saw as the next recession. And just remember, it will never look like it ever looked. You never go back to the way things were. It's always different. But at a high level, and I'd like to maybe get your opinion on this, he said, the next time we see a little recession, what's going to happen is there's going to be a lot of commercial foreclosures to local banks. A lot of the big buildings, a lot of the big retailers are closing down stores, and there's a bit of a ripple effect there to the local banks. Local banks are going to get in trouble. These big retailers are closing down, which will cause a job issue essentially, and there'll be a slight trickle down. Is where he saw the next little hiccup coming, whether it's a big recession like the last one, or something that most markets don't even feel. But I thought that was an interesting perspective there, because I see my Toys R Us being shut down, my mall being torn down, and all these retailers closing. So do you think that kind of falls in line with what you're seeing?
Well, California, it may have some things in common with other cities and may be unique. I can speak mainly about California, because that's where we've done 1,200 plus of our 1,300 last loans have been in the state of California, near the coastal major job centers, LA, San Francisco Bay Area, San Diego, and Orange County. We also have lent in a little bit in Seattle and Portland, and then selectively with borrowers that we know well. We've been to about a dozen other states, but on a limited basis. So in California, I'll tell you what I see as the biggest threats. And that I'm not sure if it's a recession, but it's a threat for real estate investment in general. Number one, housing affordability is a real problem. If the employees at any company can't afford to live anywhere near where their job is, and they have to commute an hour or more each way to get to their job, I don't think that's sustainable long term. So we got to address housing affordability. And I think, in short, the solution for that is going to be finding ways that people can use less space and still have a good quality of life, even if they have less personal space. So gotcha. I think that'll create actually opportunities for many of your listeners to develop the kinds of real estate that are going to be needed in the future, that are very efficient in their use of space. And we already have this in New York City. People aren't used to having giant amounts of space in New York City. They're used to having a smaller bedroom. But it's okay, because you have the amenities of the city there, and you have all the fun things to do in the city. So affordability of housing is one thing. I do worry about if the business environment becomes too business unfriendly. That'll probably be a benefit for places like Texas and a detriment for California. And for decades, California has been able to really thrive in spite of being a lot less business friendly than places like Texas. But I think that we're starting to see this a little bit in New York City, where they passed a rent control law that's kind of draconian there. I don't know if you've heard about that, but if they make it too difficult to do business there, eventually opportunities will go elsewhere and investment will go elsewhere. So those are my two concerns. I don't see necessarily what's going to cause the next recession. I don't think banks are going to be failing in the next recession very much, because I see the lending standards today, and they're tight. They're still pretty tight. They're very careful about who they'll lend to. In fact, to the point that it's created our whole industry, right? My company and dozens of others like us collectively are doing at least 10 billion. It's probably more like 20 or 30 billion a year of loans, mainly because the banks aren't doing those loans. And banks used to do those same loans, but now they're not.
Yeah. No, yeah, it's a whole, I think you said earlier, a parallel banking industry, which is created with the whole private lenders that are out there. So, well, great. No, thanks for giving us your your insight on that. It's on everyone's mind, and I always like to ask smart people that question. So in just a second here, everyone, we're going to go ahead and get into the main steps on how to have lenders essentially fighting over you to kind of give you money. Before we do, I just want to announce the winner of our software. This individual, they went to exactlyhow.com. They scooped up the gift from their show and other shows, and they threw their name in the hat, and now they're winning a $3,000 software. Their name is. Before we move on, here's a word from our sponsor.
Looking for a private money partner to fund your flips or rentals? Go direct to the source. PrivateLenders.com, a free marketplace that instantly matches you with up to 5 private money lenders to save thousands by having non-bank lenders compete to be your funding partner. PrivateLenders.com.
Edmund West. Edmund, congratulations. We'll be reaching out to you and getting you all set up with the best deal finding software on the planet. Okay, Jan, let's go ahead and jump right into this. The main steps that we kind of outlined ahead of time.
Absolutely.
To become a lender was to specialize, bring in partners as needed, and communication. Let's talk about specializing. From a lender's perspective, when you're looking at a borrower, why do you want them to specialize, and why is this so important?
So I'll go back to our client, Fritz Grieve, who's been specializing in Venice. He's lived in Venice. He's raised his kids there. And he really knows the value. So when a property comes on the market, if he sees it's priced right, he's able to buy it well versus someone who comes in and hasn't worked in Venice in that neighborhood before. They might overpay for property, and then that increases the risk for the borrower and for us as the lender, right? Because we typically lend 75% of the purchase price and 75% of the renovation or construction costs. And if somebody's buying the property well, it's a lower risk situation for us. If they're overpaying, it's a higher risk situation for us. So I think
let me just jump in real quick, because everything that we're going to talk about here, ladies and gentlemen, has to do with the lender trying to mitigate their risk, right? Whether it's your experience, just living in the town you're borrowing in, gives them a little peace of mind that you're buying in the right side of town. So all of these things, just think of them as little risk elements. They're trying to decrease their risk as much as possible. This way they can stay in business. Sorry to interrupt. I just wanted to touch on that.
No, you're exactly right. Our 500 investors, all they care about is that we never lose their principal, and we send them a distribution every month. That's all they think about. They don't want us to be heroes. They don't want us to swing for home runs, just singles every time. And by the way, some of your investors who view this may be interested in investing in a fund that does lending, and I just want to let them know, my company, Rick's Capital, has lending funds that distribute in the 7 to 8% range in the case of one fund, and in the 9 to 9.5% range in the other fund. And we are open for business for accredited investors that want to get exposure to the loan side, not buying property themselves, but just making income. Going back to specializing.
Well, I'll let everyone know that we'll have a link to that on exactlyhow.com. And just to make sure, if you missed that domain, don't worry about it. Exactlyhow.com will have it.
Terrific. So specializing includes, your neighborhood, you've worked in that neighborhood before, you know the values, and you know what people are looking for in the neighborhood. And then it also includes the property type. So each of the different commercial real estate property types is pretty different. You were talking about retail. And there are some people who specialize in retail, and they're seeing great retail opportunities right now. And there's other people that are losing their anchor tenant, and they're hurting. So retail requires specialization. We specialize in residential, and that could include single family homes and small apartment buildings up to a $10 million loan amount per property. So we try to specialize too as lenders, and we like borrowers who specialize and they know what they're doing. Maybe they do single family homes, maybe they do small apartments, but we probably, if somebody's doing something for the first time that's way outside of what they've done before, we might want to see them take some baby steps to get there rather than making a huge leap in one fell swoop.
Yeah, what's nice about working with someone like you, or a company that has your same philosophy there. When these lenders are looking at your deal and they're giving you feedback like this, it might be frustrating because you want to move really fast, but they're doing some of the due diligence for you here. They're saying, hold on a second, have you thought of this? So there's a lot of value in having a good lender partner that asks those questions that might pump the brakes. Because sometimes the best investment you ever made is the one you didn't do, right? And just having someone else cross T's and dot I's is a reason I always advocate, even if you have the money in the bank to go do the deal, bring a lender partner on to help, with at least some of the money. And just this way, someone else is kind of looking at it from a risk perspective as well. And you're not making a purely emotional decision.
Right, and we will advise people if we see them pursuing a project that's not going to make money, we'd rather let them know that and preserve a good relationship and be able to be there for their next thing versus having them do a project and then not make any money on it. So you're right, we do our whole independent underwriting of what's the value of the property that you're buying. Did you buy it well or did you buy it not so well? And also, is your budget realistic for what you're going to do to it? And is the after repair value realistic for what it'll be worth when you're done? And do you have the right experience to get from A to B? And do you have the right team? So actually that's leading into the second point after Specialize. You mentioned having the right team. And I'll go back to the example of Fritz. The way I met Fritz is through a broker named Todd Baker. And Todd is a realtor, but he's a realtor who really knows his numbers. So he is able to always go and figure out, is this really a good buy if I can buy it or my client can buy it at this price? Can they make a good project here? So Todd Baker has actually been the broker on the acquisition of every property that Fritz has purchased that we lent on, and he's been the broker on the sale of every property when it's done, which is a very good business for him if you think about it, because he's making 2 broker fees. But it's great for Fritz as well, because Fritz is amazing at designing and building the property, but he's not necessarily out there, looking for every project that hits the market. So he's kind of partnered up with his realtor, and there's other people that have the other skill. They're good at finding the projects, but they're not necessarily good at overseeing construction. So they might want to bring in a partner or at least a really good contractor who they can trust, who can get the project built on budget and on time.
Yeah. My rehab projects have 100%, accuracy rate. I am over budget 100% of the time. And it always takes me more time than I thought. I'm very optimistic in my outlook, and optimism is a very great trait in some aspects of real estate and a very bad trait in other aspects of real estate. So bringing in partners as needed is definitely important. So give us some other examples of, partners that you've seen your lending clients bring in and how that's helped them.
Yeah. So I think the third aspect that we didn't talk about is the capital side, because many times people aren't using just their own capital. They're putting some money in, but they're also raising money from some friends and family or others. And sometimes they might need help structuring the investment and going out and raising that money. So I think the 3 main parts of any team would be someone that can find the project and kind of hunt for a good deal and a good site to work with, a good project. And then the second part is doing the improvements, designing the improvements, and then executing on all the improvements, which might be ground up construction. And an income property might include the lease up of the property and the operations of the property for an apartment building or a retail property. And then the third part is the capital side. So I think those are the 3 main parts. And each of your viewers should ask themselves, which part am I really, really good at? Which part am I worst at of those 3 things? And then find one partner for the project that's good on the thing that you're weakest on and that covers your blind spot. That's kind of an emerging way of looking at the world that's worked for me, is to say, what are my blind spots and how can I find somebody who doesn't have those blind spots? They're really strong where I'm weak, and it's really worked well for me.
Yeah, it's funny you bring that up, Jan, because someone was just interviewing me on their podcast not too long ago, and they're like, if you had to boil it down, what's like the one secret to your success? And my answer wasn't quite as elegant as yours. I was just like, well, I know what I suck at, right? Like there are some things that I am just not working on my weaknesses. I'm never going to be an A player where I'm a D right now. So surrounding myself with the individuals that are A players there naturally, right? Mm-hmm. And it's just, that's why my company has been able to grow. That's why I've been successful in the past. It's because I know the things I'm not good at, and I don't try to improve them. I just say, if anything in this area falls on my plate, I'm going to screw it up. So I need to make sure that I have the best person possible to take that off my plate. And that's just, that's business building 101. But, for a lot of our viewers, don't think you have to become the best at everything. Other than knowing what you're not good at. You need to really take an honest self-assessment there and just fill in the pieces. You need to know enough to have an intelligent conversation, right? But you don't need to be the subject matter expert.
Absolutely. And a good example is I'm married and I have 2 kids, and it didn't take long for me to realize a lot of things my wife is really good at, I am terrible at. And so I think many of your viewers might be able to relate to that it works in a marriage, it works in a household. The same thing works in business. You gotta divide and conquer what needs to be done. So going back to how do you put your team together, I think you're exactly right. And I just want to do a quick shout out for another resource to your viewers that I think is really good. There's a book called Principles, and it's written by Ray Dalio, who runs a big investment management company. And he has gone through over the course of his 40-year career, and he's documented all the things that he's found that worked and didn't work. And so it's also free as an app on the iStore. You can basically get this content for free. But what you just described, find out what you suck at and acknowledge it and be honest with yourself and be realistic, all those things. He takes those ideas and he goes into extreme detail on each of those ideas of how to actually implement it in a business environment. So I think he's done a service to a lot of us who are trying to always improve and be better and be more successful at what we do by writing down what's worked for him. And a lot of those things might apply for your audience as well.
That's great. I'll make sure to have a link to that at exactlyhow.com, and I'll definitely be consuming that. I mean, it's just never-ending improvement. In today's business world, things are moving so fast. Your business is a sandcastle, right? You have to keep dumping on top of it, or the tides and the wind are going to flatten it out. So if you are not in the mindset that you're gonna, this is what you're doing. You're in business. You're constantly learning. You have to be learning constantly to make it work. So
and teaching too, in your case, right? I mean, you're taking what you learned and you're sharing with others, and you're taking what I've learned and sharing it with your audience, and that's part of a success formula for you.
Yeah, exactly. And the last step is communicating with a lender. And I'm going to semi-apologize in advance, but my little girl just showed up. So you might hear a cute little 2.5-year-old in the background yelling my name. But let's talk about communicating with a lender.
Absolutely. So it's pretty straightforward. The good borrowers for us, the ones that we want to work with more and more are...
Right, hold on. I have to stop you here. And if you're watching this on YouTube, you get a rare show. You get a rare showing here. Here's my little girl coming to visit Daddy at work. We're gonna go out to lunch. We're gonna go out to lunch after this. Say hi.
Hi.
Say hi. There you go.
I'm in Los Angeles. Nice to meet you.
She just got back from Texas.
All right.
All right. She's her first podcast and YouTube show right here. I'm gonna go give her to her mom real quick, and I'll be right back. You can keep talking about communicating with the lender.
Absolutely, I will. So we love working with borrowers who let us know what's going on and who treat us like a long-term relationship and almost like a partner in a way. About 80% of our loans are to repeat borrowers. So we set out to find borrowers who are going to create wealth by doing a series of projects, just like Fritz did, 5 in a row over 8 years in his case. And communication is important, especially when things aren't going well, because oftentimes if something's going wrong, we might be able to help in some way. Maybe we can make an introduction, back to the blind spots. Maybe someone's got a blind spot in a certain area, or they haven't dealt with a certain issue, and we know someone who's dealt with that issue and figured out how to conquer it, and we can make that introduction. Sometimes it could be adjusting the terms of the loan a little bit. We try to be flexible with people that are good borrowers and treat us well. We try to solve problems by making adjustments to the loan docs and not treating them as hard and fast like a bank might just say, hey, these are the documents, they are what they are, and we're not changing anything. If something unexpected comes up, we want to solve the problem so you can move on and let's fight another day.
You know, that's a really good point, though. Not just for real estate, right? Because here at Connected Investors, if you're part of our network, we send out a lot of emails, right? We have almost 1 million subscribers, so we're always sending out emails, and our email providers are like partners for us. If they go down, we go down, right? So I mean, we communicate with them constantly. We send them gifts. We do everything we have to kind of, communicate with them. Way more than anyone probably would ever think of. So anyone that you're doing business with, whether it's your lender or anyone who's an important part, over communicating, reaching out to them, building a real relationship is really important. When things get tough, or if there's a little misunderstanding, they know you have, their best intent in mind, because they know who you are. They have a relationship with you. So that's a really important little tidbit of information there. Thanks for sharing.
Absolutely.
All right. Well, I'm really excited about this, about everyone who's still on the line here, who got to kind of experience what it's like on the lender's side. Because so often you're thinking, as the borrower, this is what I need. These are my terms. It has to be like this. But you have to understand the levers and the other person's objections and where they're trying to get as well. So thanks so much for coming on the line and spending the time to speak with us.
Ross, it's been a pleasure. Thank you.
Yeah, well, you're not done yet. I do want to go grab my little girl here and get a bite to eat, but we have something really important to do, the rapid fire section.
All right.
So I'm going to jump into a series of rapid fire questions, but before I do, I want to ask you a question. What do you think your life would be like if you never made the jump into real estate?
Boy, that's almost hard to even imagine because
In a
it's so
parallel
long.
universe.
Yeah. Well, I'll give you a quick answer to that. I was 35 when I actually got full-time devoted to real estate. And I already had a house and a mortgage, and I'd been through the roller coaster ride that you mentioned, start a business, sell it to a public company, and then the stock of the public company crashed down, and it was almost got knocked back to where I started, and I had to rebuild. And fortunately, I went to work for a guy he's been a terrific mentor, and it taught me, not only did I learn the real estate business and learn that I love the real estate business, but I learned the whole concept of mentors and finding mentors and how valuable that can be. So it is very hard for me to imagine any other life. But I'll say, I feel like I'm doing what I should be doing. I feel like I have the right job for me, where I'm able to help our clients be more successful, and I'm able to deliver steady income to our investors who need that for their retirement or for whatever else. And I would not want to go back and have to figure out a different path. I mean, there are certainly people I know have been very successful in different paths if I hadn't gone this way, but this is what I chose, and I'm really happy that I chose it. I really enjoy real estate. It's a fun industry, and like I said, it's a collegial industry, so you can go out and meet other people and stay in touch and help each other, and that's enjoyable. And find mentors and be a mentor as well.
Yeah, exactly. That's really the full circle. When you get into it, you have a mentor. Once you're up and running, the sooner you can start mentoring other people, it's amazing the ripple effect that has in your life in such a positive way. And I'll make sure to put it on this episode of Exactly How. We've been talking about mentors and stuff like this. I did a great video where I show you how to get a mentor, how to find a mentor, how to provide value to mentors. So mentors have been an important part of my life, and coaches. I actually just recently hired a coach because I had mentors, but a mentor and a coach aren't the same thing. So this video kind of breaks down the lefts and rights, the ups and downs of coaches, consultants, mentors, and sponsors, which is something you'll learn about in the video at exactlyhow.com. So now it's time for the rapid fire section of the podcast and YouTube show here. So,
Ross, let me just give one more shout out for a
please.
link we can put on here. On the topic of mentors and finding good mentors, one of the best organizations in the real estate industry is called the Urban Land Institute. And they tend to draw from professionals in the real estate industry that work at bigger companies, but it's a tremendously well-run organization. It's a nonprofit organization. It's also called ULI. And it may not be as familiar to some of your viewers because they're not necessarily in the major cities where ULI is most active, but I think they have a series of programs where you can actually sign up and be part of a group that has a mentor that meets regularly, and it's called a partnership forum. And I would recommend that your people that want to really grow in real estate and blossom into a real estate career should check out the Urban Land Institute, because it's been meaningful for me personally, and I think it can be meaningful for your audience as well.
Great share. Great share. Thank you so much for that. That's why you guys listen to these shows. That's why you guys open my emails and get on the line and listen to these podcasts, because of information like this that can really have a big impact on your life. All right, here we go. On a scale of 1 to 10, how strict were your parents?
2.
2. But P.S., that's a great interview question to ask people as well. It kind of gets them opening up, talking about their life. Get up early or stay up late?
Get up early.
How many hours of sleep do you get?
8 if possible.
Favorite or most recent book that you read?
The Advantage, which is a business book about building a healthy organization.
If you could be any superhero, who would it be?
Goodness. Don't know. Sorry.
That's fair. Something everyone should do less of.
Thinking that you have all the answers.
Something everyone should do more of.
Listening, especially me.
Will people visit Mars in your lifetime?
I really hope so. And if that happens, it'll be thanks in part to a guy who's right here in LA named Elon Musk. And thank goodness that we're still attracting people like him to California, because those people make a difference for all of us.
Yeah. Bitcoin, bang or bust?
Don't know. Very interested to find out.
Yeah. All right, Jan. Thank you so very much for spending the time with us and all of our viewers.
Ross, that was a lot of fun. Thank you so much. And let's stay in touch.
Yeah, you bet. All right, everyone. You made it to the end of the show. Most people don't finish what they start, but you found a lot of value here. So what I'd like you to do is just give us a thumbs up, like, share it, at least leave a comment. Let us know if there's any other shows that you want us to do, any other people that you want us to interview. Let us know your top takeaway. Your interaction really fuels us. We spend a lot of time, energy, and effort to bring you this amazing free resource. And all we ask is that you interact in some simple one-click way on this video, on this podcast, or on Facebook. So thank you so very much for being here. Visit exactlyhow.com and scroll through all of the past shows. Every show comes with a great gift. So you can just go there and just scoop up so many fantastic gifts, tips, tricks to help you get to the next level. Again, my name is Ross Hamilton, CEO of ConnectedInvestors.com, and I'll see you on the inside. Bye-bye.
The Connected Investors app connects you with investors, notifies you of available properties, helps locate cash buyers, and secure private funding to close deals. Set up in seconds to become a member of the Connected Investors social network. Now you can scroll through your main feed to find cash buyers, see investment properties not available to the general public, and network with investors by adding your own comments to a thread to keep the conversation going. The Control Center is your connection to add properties to sell, start new discussions, connect with local investors, and even find private funding. The Notifications tab will keep you alerted to new investment properties and offers. You'll also find new friend requests to connect directly with the community to build your network. From the property marketplace, you'll be able to find, favorite, and make offers on investment properties. Download Connected Investors today to find, figure, fund, and flip investment properties on the go.